Hello guys, I took this sell trade this morning, few hours ago on Boom 300 index, and you can see I'm moving in good profits. Yeah, so I took this sell trade using a simple trading concept. So what was my market approach on this index? What was this trading concept? All I did was just to identify the major key levels and zones, and we had a level of resistance at this zone, a key level of resistance on Boom 300 index at this level. You've seen how the market reacted on this zone as a resistance in the past. We had past market reaction on this level as a resistance. It got broken. We had a couple of market reactions on this level, a couple of trading decisions on this level. The market bought and sold on this level. We got the breakout before the market broke back inside this level. This is like a fake breakout of this level of resistance. Yeah, so we got the market come back to this same level. Market came back to this same level of resistance and reacted on it. You can see this bearish engulfing candle that formed on the approach of this level on the daily time frame. Yeah, so this is the daily time frame bearish engulfing candle that formed when it got to this point. This candlestick actually gave the sales a downside. It gave this bearish move we got at this point. This is the market approaching this identified key level of resistance. So we got the first test here on it, the second move at this point, third move at this zone, the fourth move at this point. So the market has always reacted when it gets to this point. Market has always sold on a test of this level, and we have another level at this point as well, another level at this zone. The key things I do whenever I want to look at for trade opportunities, whenever I want to analyze the market, is to identify the major key levels and zones we have on the higher time frame. These major key levels appear mostly on the higher time frame. It appears on the monthly time frame, the daily time frame, the weekly time frame. So these the daily time frame key levels which I've identified, the major key levels in the market. And we always have about 80% chances of the market reacting on these identified levels. When we identify these levels properly, we have higher chances of the market reacting on these key levels, like we got at this zone. Market reacted on this level of resistance, sold, broke above it, resistance broke, returned to support. We got the buys at this zone. When we zoom in the chart, you can see this clearly. Market bought at this point, came back to the same key level, bought from it. We had the market break below this level. This is like a fake breakout of this zone. Markets pushed back inside this level, reacted on this same level again. Why the markets push further to the downside is for the market to come test this level, this new level it formed at this zone. We've seen the market reaction on this level as a support here, a support at this same level. So the market's pushed further to come validate this key level. So if the market is to sell further in the coming days and weeks or months on Boom 300 index, if the market is to break below this key level identified at this point, this key level of support identified at this zone, we are likely to get the market react at this level. We are likely to get the market react on the test of this level, on the approach of this level. We're likely to get a market reaction at this zone. So this is what's behind key levels in the financial market. So I sold on the test of this identified key level at this point. I sold on the test of this level at this zone on a lower time frame. And when identifying these levels, when spotting our key levels and zones, getting our expected buy and sell zones, and not to take our trades on that time frame, we have to go to a lower time frame to get a good entry point, to get a good sell or buy confirmations on those levels. So we got the market buy from as a support, bought from here to as a support, bought from here as a support, bought from this same level as a support. So before the test on this level of resistance, we've got this bullish run on Boom 300 index for days. We've got this bullish move to the upside for days, which gave us the test on this level. So I was expecting the market to sell back to this same key level of support for possible buys on it. I'm expecting a move of this kind, a sell to this zone, basically a sell to this level for possible market reaction on it, right? So that's my expectations on Boom 300 index. So after identifying the market key levels and zones on a higher time frame, identify the market structure as well. The market forming a downtrend formation, the market giving a downtrend formation at this zone. You can see the market is creating lower highs formation. Got the first highs at this point, got another high at this, an equal high basically. This is a lower high formation at this point. Then the next high that forms is likely to be a lower high, which we are getting at this zone. So the sell is expected to this key level of support on Boom 300 index in the next coming days and hours. So my expectations on the sells basically. So I took my sell trade at this level. It's my target point on this key level of support. So I have my first TP level at this zone. Basically my first TP level at this zone. We have an intermediate key level as well. We have an intermediate key level of support and resistance, because we've seen the market reaction on this level in the past. The market sold from as a resistance, got broken, resistance at this zone, resistance here, support at this point, resistance at this zone, got broken, tested as a support. So this has been a key level, a level we've had multiple market reactions. So we are likely to still get the market react on this same level. We've seen how the market bought from here as a support, got broken, resistance at this zone, resistance at this same level. So resistance level got broken at this point. Basically, this is my first target level at this point. So the sell is expected on boom channel index to this zone, and we have the market create this higher lows formation. This is a bullish structure as well. This is a bullish structure, but my general target level is at this point. I have my general TP level at this key level of support. If the market is to break below this level, we are likely to get the market sell to this zone before any buying move, or the market push further to this last level of support, this last key level identified at this zone. Yeah, so these are the three major levels I'm looking at for possible buy reaction on. The first level at this point, the second level at this zone, and the third level at this point. We're likely to get the market to react more on this level. You're likely to get a reaction on this zone, because we also got a trend support at this point. The market bought from as a support, we got the buys here, we got the buys here, we got the buys here. We had about 3 buys on this trend support. The market is likely to sell to this zone for possible buy move on it to the upside. So sell is expected. I'm shorting this index for the buy expectations. So that's my market analysis. Basically, that's why I took the sell trade on boom channel index, working with market key levels, identifying the market key levels and zones on the higher time frame. Started from the daily time frame, spotted the major key levels we had and took advantage of them. Sold on a key level of resistance, and the trade is moving nicely well. The sell is expected to this level at least. Our first TP level at this zone, our second TP level likely to be at this point. The market is to break below this level, we are likely to get the buys from this zone. So sales expected on boom channel index, more sales expected basically. For my entry confirmations on boom channel index, I went to the 1 hour time frame and saw the market formed an ascending channel at this point. And ascending channels are like reversal patterns. There are reversal patterns and also continuation patterns. So we got this ascending channel formation that got broken at this point. Basically, I took my sell trade on the break and closed below this last candlestick. We had this last candlestick that formed at this zone, so I entered at this point. I took my sales at this zone. I had my entry on the 15-minute time frame. I identified a double top formation on the 15-minute time frame, the first highs at this point and the second highs at this zone. So I waited for a break of this structure, a break of this neckline, which we got at these points. We had the neckline of this pattern formation at this zone. Yeah, so we can see how the market reacted on this level as a resistance in the past. We had the reactions at this point, resistance at this zone, support at this point. So we had a break below this level, basically a break below this trend support, this ascending channel, the support trend would say. Yeah, so we got the break below it, a candlestick break and closed below this structure. So I took my sales at this point, the retest of this broken trend support on resistance, which we got at this point. So I took my sales at this zone, but I've got some more sell entries at this point. This bearish engulfing candlestick close, but managing my risks. So I had my stop loss at this point, I had my sell entry at this zone, moving in good profits, trades moving nicely well. My first TP level is at this point. Basically, my first TP level identified on the 1 hour time frame, first TP level at this point, long-term sales on boom channel index. So that's why I took the sell trade on this index. Hit the like button for more trade reviews like this and drop a good comment on this video. Don't forget to subscribe if you're new to the channel. To my returning viewers, I appreciate the support. Please engage in my videos. It means a lot, guys. Let's do more and do have a wonderful day. Peace.